Welcome back to the ETF Inspector. It's Tuesday, November 25th, about 11:30 in the morning. And being Tuesday, that means it's time for our weekly announcement of distributions for the week ahead. So YieldMax on Tuesdays puts out their Group 1 declarations. If you go to YieldMax ETFs, click on distributions, you can go down. We've got target 12s that are, it says monthly, but it's every 4 weeks. And then Group 1, that's what we're talking about today. And then Group 2, those will get announced tomorrow. We've also now got Group 3 that are also weekly, the new Target 25 funds, but they have separate days just because they're trying to eventually get to the point where you're getting something from YieldMax where you can receive payments every single day. So Group 1 is what always used to be weekly, plus the addition of FEET and 5E. So that would be Chippy, FEET, 5E, GIPT, LFGY, QR, and SDTY, Salty, Alti, YMAG, and YMAX. All right, and we've got this week is a little bit different than usual. So if we scroll down here, 11/25, that's today's announcement day. 11/26 is X day, but the 27th is not payday. That's Thanksgiving, so you're going to have to wait until the 28th to receive the payment that you are hearing the announcement for today. That doesn't change the X day, though, so you've got to purchase today in order to receive that. This isn't financial advice. Obviously, you don't have to purchase at all. Just if you want to receive the distributions that are declared today, you're going to have to buy today. Before tomorrow, you're going to need to have it tomorrow when the market opens. All right, reminder, I'm on X at ETF_Inspector1. I generally just post my own videos and repost all the different announcements for the ETF. So you get this morning's announcement here. We're going to look at it in a different context, though, that gives a little bit more information. But I thought this was important enough to repost. This comes from Mike over at Health and Wealth. Big fan of his channel. And he's not the one that like dug deep and found this, right? But he's bringing it to our attention that JP Morgan manipulated markets with this whole Bitcoin crash lately. So definitely a video worth watching. Definitely stopped me in my tracks from I was about to be purchasing JPMO. I will not any longer. But moving on, though, let's go ahead and look. So I do take the announcement numbers. I plug them into my own spreadsheet. Just makes it a little quicker to compare all of them. Now, when we look at declaring the winner, you're going to see on the other page, Salty's going to end with a percentage just a little higher. But as for this one, it looks like Alti's higher. That's only because now that the market is open, Alti's share price has dropped and Salty's share price has risen. So when you take the distribution divided by the share price, it's going to look larger for Alti than it was at announcement time and smaller for Salty. Either way, they're both around 77%, and they are almost the clear winners. I guess FEET gave a little bit of competition at 74%. But all in all, fairly standard percentages. I'm thinking about in the future, maybe trying to have a chart for each one so we can just kind of look at a glance and see distributions looking like they're declining, staying flat, or rising. Obviously not based on percentage, but based on actual dollars and cents amount. So let's go ahead and take a look at the email. Now, if you I'll get this part out of the way. If you want to receive the emails on those announcements, you go to YieldMaxETFs.com, click on Stay Connected, scroll down, type in your information, and click Submit, and you will then start getting the newsletters. All right, they come right on time, every time, 6:55 a.m. This was received. You can see Group 1 distribution announcement, and we'll just run down the line. We're going to go the actual dollars and cents amount, what it comes out to an annual yield percentage, and then finally ROC, return of capital percentage. Just understand this is an estimate. ROC is so it's totally accurate for this week. The only thing is it's taxable income is not defined based off of the week that you traded. It's based off of the year. If any of you guys have traded before, you could make a big win on a January trade, but then lose money the rest of the year, and then you don't pay taxes on that win from January if you've lost an equivalent amount later on throughout the year. So it's an estimate in that there's no way to know until the year's finalized what actually the percentage of return of capital is, but based off of how things performed this week, here's what the percentage was. First off, Chippy. And I'll just let you know, I own Chippy, I own GPTY, I own LFGY, I own Ulti, I own YieldMax, and in my 401k, I also own YieldMax. So I do hold a large percentage of these funds. Chippy is the semiconductor portfolio option income fund. They announced 43.94 cents per share. That's 41.73% annual yield, and 20% of that was rock, so 80% was income. FEAT and 5E, very similar. Dorsey Wright featured 5 income fund and Dorsey Wright hybrid 5 income fund. So FEAT paying 37.26 cents per share is 72.9% annual yield, and a little over 85% of that was return of capital, meaning that a little under 15% was income. 5E percentages are going to look similar on the rock, right around 85-15, but it was 25.71 cents per share, comes out to a little over 42.5% annual yield. GPTY is the AI, basically the AI version of Chippy, or LFGY, right? So Chippy is the semiconductor portfolio, GPTY is the AI portfolio, and LFGY is the crypto portfolio. I'm always a fan of portfolio type funds over individual income funds. So GPTY announcing 30.51 cents per share. That's a little over 36.5% annual yield. It was 100% return of capital. So that just means that they did not necessarily bring in all the income from options trades or even if they did bring in plenty from options trades, they may have closed out positions, sell some actual shares for a loss to offset the gains. So there's all kinds of different scenarios that could come into play. LFGY, the crypto portfolio, 36.73 cents per share. 69.5% annual yield. It was 100% return of capital. QDTY, so we've got these 3 in a row, Q, R, and S. They are 0 DTE covered call strategies, so that means they sell calls on an every single day basis, every single trading day, on the NASDAQ 100 for Q, on the Russell 2000 for R, and on the S&P 500 for S. So QDTY bringing in 41.91 cents per share. It's a 49.4% annual yield, 100% return of capital. On the Russell 2000, it was 48.93 cents per share, 62.4% annual yield, and 100% return of capital. And S for the S&P, 33.7 cents per share is an even 39% annual yield, and it was practically all return of capital. 0.6% was income. All right, Salty, the ultra short option income strategy fund. They've been doing very well in this market that has pulled back over the last month or two. 57.4 cents per share is a 77.53% annualized yield. Almost all of it is return of capital, 97.33%. Ulti, the ultra option income strategy fund, 5.94, so they broke into the fives. This is the lowest that they've paid, 76.62% annual yield. So as you can see between these two, Salty's the clear winner based off of the numbers that they used, frozen in time at the point of their announcement. But as the markets are open now during this and things have moved, it made Ulti look like a slightly higher percentage. Ulti was 100% return of capital. We've got YMAG, the Magnificent 7 fund of option income ETFs. So it's similar to YieldMax, but YieldMax is going to have basically all of their individual income funds within a fund. YMAG is just going to have their individual income funds specific to the Mag 7. within it, paying 12.27 cents per share, 43.78% annual yield, and a 43.26% of that was return of capital. So more than half, 56.75% was income. And finally, YieldMax, the universe fund of option funds, 10.12 cents per share, a little over 50% annual yield, and a little over 50% on return of capital, so just under 50% on income. All right. I don't know why they keep saying this. Salty is hereinafter referred to as the short ETF. Okay, I think that's everything I wanted to bring to your attention. So again, I'll have to, it's been a while since I made charts and graphs on Excel, but I definitely know it's not that difficult. So I might go through and, where is it? Say for example, let's pick Chippy. I might scroll through and just enter all these distributions, and maybe I'll go for ones that are maybe all for 2025 or something like that, all since things switched over to weekly. I'll pick something, and then that way we can kind of just look at a graph and watch it kind of bouncing on points and see if it's rising, staying the same, or lowering over time. But if you look way back in the beginning, 36 cents was the first payout on Chippy, and here we are, about 7+ months later, and they're still paying 41 cents. So Chippy is a good one for sure. Okay, I think that's all I've got for you. Always feel like I'm forgetting something once I press record, and then after it's over, I wish I would have told you more. But I would say check out my guesstimate videos over the weekend. The week look ahead would have had a guesstimate for LFGY, and the week look ahead for Ulti and Salty would have their guesstimates to see how close I was. Or stay tuned for tonight's video where I will talk about them all in one video. All right, thank you. Go back to work. Have a good day. If you're retired, go back to sleep, and I'll catch you in the next video.